macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Yes, he's still bullish. Who's he? He's our tactical trader, market timer, Kevin Cook, and he's here with me right now. And you've got charts to prove it, don't you?
I could give you 100 charts to prove it, but I'm going to try and just do 3 here real quick in 2 minutes, since I always usually drone on for 8 minutes.
All right.
So here's the gap that everyone thinks needs to be filled. This is the spider, so you can really see the gap. You wouldn't see this on the S&P 500 index chart, but on the spiders you see it. That yellow splotch there is the gap from below, basically 1430 up to 1460 area. Now we're holding this 1450 area, and this is very important. So does this gap need to be filled? I don't think so, because let's take a step back here. This band, basically 1400 to 1435, the red lines on the bottom, 1400, 1430, 35, the green lines on top. That was a very significant zone. Remember, a few months ago I said it was a lot of wood to chop. It would take us a while to get through there. Well, you can see in December we worked through there pretty quickly, and finally, once we resolved the fiscal cliff, we blew through there. So that's why 1430 will continue to be strong support, but the market's not even getting there. All the pent-up demand that launched us up there is still buying stocks as we're quiet here. What are we waiting for? Well, we're waiting for a debt ceiling fight that's coming in February,
right.
But the market knows that's coming, and so that's sort of getting priced in. And then earnings season. Now, earnings season could be a catalyst either way, so it really comes down to, where are our expectations? And yes, earnings estimates come down for the S&P. Just about every year you can look at where estimates started out up here at my elbow and get revised lower, right? So we're still hanging out around, say, $110 for 2013 EPS estimates, but they're coming down to 107, 105 maybe. But still, if the market can price in a multiple of 15 times 105 is 1575. And this market seems like it wants to beg for new highs. I drew the ellipse around the resistance earlier this year, the September highs, 1460 to 1475. We're hanging out up there. So this tells me this is a market that wants to go higher.
Okay.
Lastly, let's look at one sector that is particularly strong and wouldn't be strong if the global economy were getting weaker, and that's industrials. This is the XLI select sector spider for industrials. Making new highs ahead of the broad index and making 5-year highs. So those are my 3 charts that keep me bullish.
All right, always good to get a dose of optimism from Kevin Cook, our tactical trader. Read what he writes on Zacks.com if you haven't already, and if you're not there watching this video, and come back often because he writes a lot. With Kevin, I'm Terry Ruffalo.